Welcome to another episode of Financial Minds Meet the Experts. I'm Jamie Agostino, your host. We are continuing our series on meeting the experts here at Vizo Financial that are helping to accelerate credit union success. Today, we're diving into a critical area that directly impacts both growth and stability: Treasury. I'm sitting down with our Treasury team to talk about how they support credit unions through lending, liquidity, and strategic financial management. From managing lines of credit and safekeeping to helping credit unions refine loan pricing and conducting in-depth lending analysis, the team plays a key role in ensuring institutions stay competitive, compliant, and financially strong. So let's get started. Welcome, Tim. Welcome, Josh. Could each of you just take a moment and introduce yourselves?
Go ahead, Josh.
All right. Yeah. My name is Josh Faith. I'm the lending services and treasury director. I've been with Vizo Financial going on 6 years this year. I work in the investment credit team mostly as where I've been, and recently we added on the lending services operation under my management. Um, I've got a background mostly in lending. I've worked at a couple of places, worked in a consumer finance company, a small community bank, did consumer loans, mortgage loans, ag lending, commercial loans, a lot of collections, handled repossessions and foreclosures. Um, I did AAA or the ALL allowance report for the time I was at the bank. So I've done a lot. Started a credit department at the bank I worked at. Um, Grew a credit analysis team. Um, so I brought all that here, started in investment credit, and like I said, now moving more into lending services. So,
All right. Well, welcome, Tim. Why don't you, in case somebody doesn't know Tim Sustak, we'll have you introduce yourself.
Thanks, Jamie. Yeah, I'm Tim Sustak. I am the SVP, Chief Treasury Officer. I'm getting really old. I've been with the corporate for about 33 years, I think now, and I've kind of been all over I actually started as a member service rep, so that was really fun because I got to meet a lot of credit unions, a lot of people in credit unions at the time, and it was just a great experience, being able to talk to a lot of different people, and then kind of went to the finance side. That's what I was trained for and interested in, and kind of been all over the financial side of the shop, from the accounting department, doing everything from financial analysis, accounting for the investment portfolio, credit work, financial statements, pretty much anything you can think of there. Moved over. I had a lot of interest in the investment side of the shop, so moved to the investment side of the shop, and worked on the investment portfolio and lending products, and ran the portfolio for a few years. And then when we merged, Fred, who's now our CEO, Fred and I had similar jobs, so we kind of split stuff up. Fred ran a portfolio, and they asked me to start a portfolio credit department. So similar to what Josh started at the bank, where he did a lot of credit work around their loan portfolio.
Mhm.
We started an operation to do a lot of credit work around our investment portfolio, because our balance sheet's pretty much an investment portfolio rather than a lending portfolio. And then because the corporate was originally started as a liquidity provider, and it's one of the most important things that we still do for credit unions. When Fred took the reins of the corporate, he had asked, "Hey, I'd like you to focus more on liquidity and what we can do both for the corporate's liquidity and monitoring and managing that, and then coming up with some solutions for credit unions as well." So that's what gets me here, and happy to be here after all these years. It's been a great ride.
All right. Well, I know it's just not the two of you over in the Treasury credit area. So tell me about the others and what their role is.
I guess I can start. Treasury, I think, is kind of five broad areas, if you will, at this point. So, kind of a section that works on liquidity management, both internally for Vizo and Vizo's balance sheet, as well as options for members. Going along with that is our lending operation. And Leslie Hannon, our loan administrator, I'm sure a lot of our members know her well. She's our loan administrator. She handles all things lending. So, if you need a new line of credit, need an increase in your line of credit, have an issue with a loan, need help with Zephyr and putting on a loan, Leslie is your person. She does a great job. She's very responsive, loves to help our credit union members, and she handles everything on the lending side of the shop. Um, with a little bit of help from a few of others when times get tight. So Leslie is all things lending. Bill Coleman runs our safekeeping operation. And similar to Leslie, they're kind of interchangeable. They back each other up. But Bill does anything from the safekeeping side. So if you're a member that's looking for a safekeeping solution, or you're on the safekeeping program and you need help with things, you need to understand a settlement or something didn't work right, or what have you, Bill Coleman is your person on safekeeping. Josh, I'll throw it to you for.
Yeah. And on the credit side, we've got two people who are investment credit analysts, Tracy Miller and Hunter Sutton. Tracy started back in 2023 with us. She's got a wealth of accounting knowledge. She's been an accounting supervisor, controller. She's worked in a couple different industries, manufacturing, financial institutions. So she brings a lot of good experience there. And then Hunter, he's more of a credit background. He started last year. He's worked at a couple of different places too. He's been a credit risk controller. He's been a business analyst and a business intelligence analyst. So really good additions to the team.
All right. All right. So, for our listeners that may not be familiar, how would you describe the role of the Treasury and Credit Department?
Well, I guess we'd probably divide that into two sections, right, Josh? So I'll kind of handle the what you'd consider traditional treasury, the lending and safekeeping, and I'll let Josh handle the credit side and lending support. Um, the role of the Treasury and Credit Department, I think first and foremost, and you know this, Jamie, and we corporate credit unions were created as liquidity providers. First and foremost, it's grown into so much more now. But originally, when credit unions conceived of us and started us, that's why they started us. They needed a way to aggregate funds and have kind of a bigger impact to go to the market with to get some additional yield. And then they needed a way to access liquidity when they needed it. And corporate credit unions were built for that purpose. So first and foremost, the role of the Treasury Department is to help to manage that process. I mean, we certainly don't do it alone. We work very closely with the folks in our investment operation, the folks in our accounting operation. We are all working on liquidity for the corporate to make sure that the corporate has adequate liquidity at all times, that liquidity is constantly monitored, that we have both, ability to source liquidity internally, as well as having adequate sources of liquidity externally, should we need to access those. And we are just constantly working, in concert to make sure that the liquidity position of the corporate um, remains solid, not only for our operations, but for our members when they need liquidity. To go along with that, the lending operation. I think pretty much every one of our members has a line of credit with the corporate, and the larger credit unions have more options for external liquidity than the smaller generally. But we're a resource for all, and we're a very easily accessible resource. So, we play a huge role on the lending side in just a stopgap for daily settlements. If a credit union has more settlement activity than they think they need, or they just need liquidity overnight, or they need to borrow term. The line of credit here is a source for all of our members. They just use it different ways. And then for those that invest, the safekeeping operation, and we'll talk about it, I know, a little bit later, but a place for them to ensure that their securities are in a safe place, a convenient way to have their payments collected, and they will always know that their securities are where they should be and not being used for any other purpose. So it's really about managing risk for credit unions, managing liquidity risk, helping them manage risk with their securities, and being a support that way.
Okay.
Yeah, and credit, we're more of a internal type role, but a lot of what we do is still, to help protect our members'
Mhm.
money. So,
Yeah.
our investments, we invest a lot in government-backed securities that have little risk. We don't really focus on that. We focus more on the investments in asset-backed securities and corporate debt issuance that, carries more risk. But we make sure that we're investing in high quality investments, usually AAA rated. We do a lot of monitoring of those investments to make sure there's little risk. And then what Tim was saying with placing deposits at different financial institutions, we're doing financial reviews of those institutions to make sure that they're financially sound and they're a good place to hold deposits. We're doing reviews on insurers that we use. We're doing reviews on brokers that we use for investments to make sure they're maintaining their licenses, they don't have any violations against them. And then, finally, we do financial reviews on third-party vendors. So any products that we're using internally, we're looking at the vendors that provide those, but also we offer products to our members, through vendors. So we're doing financial reviews on all of them to make sure they're going to stay around, they're going to be able to, stay in business and continue to offer those products. So a lot of what we do is internal, but it also touches the member. So.
Yeah. Sounds like you guys got a lot going on there. So tell me, what does a typical day look like for your team? Like, and where does it directly impact the credit union?
Yeah, I think the typical there are certain operations that have a typical day, and there's certain operations that don't. Certainly just from the liquidity management side. I mean, there's annual cycles, there's business cycles, right? So as we all know, credit unions included, because most of their balance sheets flow this way. The kind of the first quarter of the year is the growth quarter. So liquidity problems, if there are any, usually kind of heal themselves, and then liquidity drains through the summer months into the fall. So on the Treasury side, a typical day is trying to assess what the liquidity position of the corporate is, and make sure we've got um, ample sources of liquidity, our lines of credit externally are collateralized properly so we have access to them, making sure there's um, you know, appropriate funds ready and available for credit union settlement. On the lending side, going along with that, Leslie is quick to jump on requests for increases in line of credit, any new line of credit requests from our members, and she's doing probably the same thing that folks are doing in their loan shops, as far as looking at daily reports, making sure there are no overdrawn accounts. If there are, reaching out to credit unions to see if there's a way we can help. Um, on the safekeeping side, bills going through, doing daily settlements of all the payments and purchases and sales that are being done, working with credit unions to make sure that their purchases and sales settle correctly, working on any issues that are outstanding as far as payments or questions that credit unions have. So, on that side of the shop, the liquidity side, unless there's liquidity strain going on, the members may not see that directly. Right now, there's not many loans on the books. Nobody's generally crying for help. But we're still here managing, the liquidity of the corporate to make sure that it is positioned appropriately, continue to have access for when credit unions do need it. But on the lending and safekeeping side, those members see that direct reflection in the fact that, hopefully we're getting them timely responses to, credit line increase requests, subordination requests to help them obtain lines elsewhere outside of the corporate, because we know that's a good business practice for credit unions to have. We want them to have multiple sources of liquidity.
Mhm.
The fact that Bill's really responsive in helping a credit union who doesn't invest very much go through the process of how to load a security into the system, or help the credit union that has 500 securities in the program figure out what happened with the payment. So there you'll see more of a direct touch with members, and I think that's what everybody likes about their job. They like helping the member credit unions. It makes you feel good when you can help them solve a problem.
Yeah, absolutely. So,
Josh, your side's a bit different if you want to just add a couple.
Yeah, I mean we kind of have our hands in everything. We're doing annual reports each month. We've got, we look to see what is due for that month. We're doing reports to check, make sure we're maintaining concentration limits. We're not, violating any policy or regulation. We're checking ratings on all the investments and the programs and uh, the servicers of those programs. We do, performance metric monitoring of the investments to look at, delinquency, charge off, recoveries, and a whole host of other, metrics. Um, a really big piece, though, is kind of just staying in tune in the news, what's going on. Gas prices are rising. There's a conflict in Iran. What's happening in the ag sector. China wasn't buying soybeans, for a while there. How's that impacting farmers? What's going on with supply chains? Are manufacturers going to be able to get parts to build new vehicles? And if not, how's that going to impact used vehicle supply and prices? And all of this we've got to kind of weigh to see how it's going to impact the performance of our trusts, our investments, but also what's that going to do for future, investment opportunities? Is there going to be opportunities to invest in, down the road? So we're trying to weigh all of that, on a day-to-day basis.
okay. All right. So then tell me, one credit trend you are watching that may be of interest to our credit unions.
Yeah, I think right now on the used vehicle and electric vehicle side of things, yeah, this is my opinion, not the advice of Vizo Financial. Um, but it seems as though there's a really good opportunity right now if you want to, run a loan promotion.
Yeah.
Used vehicle supply has been really tight for a number of years because new vehicles are just too expensive. So a lot of people are going into used. That's, lowered the supply. Last year, that was, further compounded because there were less vehicles coming off lease, which provides supply into the used market. Well, that's kind of turning the corner here in 2026. More vehicles are coming off lease, which is going to give supply into the used market, but a greater percentage of those vehicles is also going to be electric vehicles,
Mhm.
which I think is just a great time right now with gas prices being high. People have been hesitant to go towards the electric vehicle. Um, but the other thing I think is going to really benefit right now is the premium of an electric vehicle over what a traditional, ICE vehicle, internal combustion vehicle costs is really narrowed. So essentially they cost the same. So there's really no reason not to consider, especially with high gas prices. So, and then considering that new EV production has been cut back a bit by manufacturers since the tax credit ended last year. I think if you finance an electric vehicle right now, your collateral is going to maintain value, if not even, gain some value. So I don't think you're going to be at risk for negative equity. So I think this is just an ideal time, to maybe run a loan promotion, or talk to your dealers and consider some indirect lending opportunities. But that's just, one of the things that we're keeping an eye on in credit, that might benefit our members.
Okay. All right. Well, what are some common liquidity challenges credit unions face, and how do you help solve those?
Yeah, they can come from so many different places. From just, unexpected deposit withdrawals. It can come from, the changes in the marketplace, changes in the value of the investment portfolio, those securities you thought you'd be able to sell for liquidity, you can no longer sell, unanticipated loan demand. There's so many ways credit unions um, can get caught a little bit short on liquidity. Larger settlements for a day. We see that all the time, unanticipated settlements, and some credit unions just have a larger cyclical swing than others, and it's not always easy to prepare for that. So, we have a lot of tools in a toolkit to be able to help credit unions with liquidity. I mean, first and foremost is a line of credit that members have here. We are always willing to work with a credit union to get them the liquidity they need through the line. So, I always want to encourage members to reach out And please, if you can, proactively, if you know you're going to get caught short, reach out to us. You know, may we always we try to be a little bit, and stingy with liquidity, if you will, as far as lines of credit, right? Because we want to give you a number that we believe that we can always hit, right? We don't want to give you a big number and then have a credit union come for liquidity and say, well, we can really only get you half of that or 75% of that, because that doesn't do anybody any good. That just exacerbates the problem. So, but that doesn't mean if you have a time of liquidity strain that we can't give you a temporary bump in that line, or that we can't use other tools. Our investment folks can look at your portfolio and see maybe how they can do some trades to help you free up liquidity. We have loan participation programs. We have issuance through simplicity. So there are a lot of tools that we have at our disposal to be able to help credit unions. We would just ask, if you can, if it's the 11th hour, it's the 11th hour. We're still going to jump in and help you get something done. But the sooner you can let us know, the easier it is to get these things implemented. But we've got lots of tools in the toolkit. So, please reach out anytime you think you have a liquidity need. We're going to work to help you.
All right. Can you give me an example of when your team helped a credit union navigate a difficult financial situation?
Oh my. Yeah, I mean, I guess we'll say we won't do anything specific to protect the innocent, as they say. But I go back to 22 and 23 when rates rose rapidly. 500 basis points in 15 months. The Fed gave everybody a head fake because they said, hey, rates are going to go up, slowly and gradually, and unfortunately with inflation, that just couldn't happen. So gosh, you had for the first time, people were seeing 5% CD rates. There's, members are shopping around for rates, deposits are leaving. People are taking out loans. They're trying to get money before rates go up. All the portfolios just got hammered in value. So all those securities that credit unions thought were liquid, all of a sudden were not liquid. And, I was really proud of our team, not just our lending and credit team here, but the investment folks, work so hard, account managers, accounting folks getting things positioned. I mean, you know, we work with credit unions feverishly to get them liquidity. I mean, we have credit unions calling us the day before saying, we're going to be out of money tomorrow. I need help. And, account managers work to get them set up on simplicity for issuance. We work to get them additional liquidity through the line of credit. The investment folks worked on trying to get them not only simplicity, but look at possible ways they could get some relief in the portfolio. Safekeeping was working to get securities pledged to the discount window into the bank term funding program. We really scrambled to help credit unions, and I was really proud of that because it just made you know why you came to work every day. Because I'm confident there are credit unions that would have had really significant problems. If it wasn't for the team here that was on top of it and reaching out and helping them get liquidity. Loans were flying out the door, and a lot of that on some level came from loan pricing, right? Because credit unions had not really adjusted their loan rates quickly enough. And I remember working with a couple credit unions, just trying to buy them time with liquidity until they could convince the board, you need to raise loan rates, you need to shut off the spigot. So a lot of it is just, working with them that way, trying to give them help with liquidity to buy them time. We always say, liquidity can be a very quick and deadly problem, but we're here to help you build a bridge. Let's come up with a plan. Let's build a bridge to the other side so we can buy some times to get things normalized and to work you through the problem. And all you need to do is reach out. We'll put all the tools we have to work for you.
All right. Well, thinking of the tools, you guys recently had some news of your own. Can you share just a little bit about the lending support department that you guys are spinning up and how it can help credit union with, a lot of those challenges?
Yeah, I can take that one. Yeah, I mean, we know credit unions are the experts in lending. But we want to be able to provide some tools and resources and education that, hopefully will make their job, a little easier. Um, right now what we're doing is we're kind of in the exploratory phase of what can we offer to credit unions. One thing that we're doing is we've partnered with TCT Risk Solutions, and they've got a number of really good tools that we're about to roll out here. One is a loan pricing tool, which will help. What Tim was just saying, that issue with, are you are you able to match your competitors? Are you pricing too low? This tool will help break down the cost to make a loan by the different loan types. And then you can play around with rates to see, what happens if I match my competitor's rate. What happens if I move down the credit curve? Can I lend to a C, D, E type credit? And yeah, my risk of loss is going to go up, but if I charge 12, 13%, I can get that loan where my competitors may be charging 18%, and I'm still making money, even, considering a higher loss rate. So that tool, I think, is really going to be a great benefit to credit unions. They also have a credit migration tool, which kind of has a dual purpose where, when you lend to somebody, you pull their credit report, you get their FICO score, that's fixed in time. You put that onto your loan, your core system when you book your loan, and it just sits there unless you pull your credit, the credit report again for some reason, or the member reapplies. Um, what this will do is it's going to monitor what's happening with their credit score. So if down the road you want to do a loan promotion and you pull a report that says, show me everybody that has a 770 credit score or higher and is paying, less than 30 days delinquent. Well, that member might show up on that report because they're paying you well. And as far as you know, their credit score is great, not knowing that they've fallen on hard times and they've actually stopped paying other places, and their credit is deteriorated. So this tool is going to save you some, an embarrassing and awkward conversation where, you offer a loan to this person, they apply, they're interested, and they have to go back and say, I'm sorry, I can't help you. The other side of this, you'll be able to see them, deteriorating in their credit, and then you can reach out to them. Yeah, they're paying you well, but that may not last. You can call them and say, we see there's, potentially some issues here. What's going on? Could we do a debt consolidation loan? If you've fallen on hard times, are you getting back on your feet? You run up your credit cards. We can consolidate those credit cards and into one term loan, and help get you back on your feet. So, these are two tools that we're rolling out, partnered with TCT. As I said, we're exploring other options. Anybody that's listening, I encourage you right now, reach out to me or Tim and, tell us what your pinch points are. We'll take it into consideration as we consider, what we can offer to you.
All right. And for those listening, if you're interested in learning more about the relationship with TCT Risk Solutions, we are holding a webinar on, let's see here, June 3rd at 2 o'clock. So credit unions can register to learn more about the TCT partnership. So thank you both so much for joining me today. Any final thoughts you'd like to share with our audience on how your roles help credit unions succeed?
I would just say that, the most challenging problems are liquidity problems, right? You can go a long time not making any income or losing money, as long as you've got access to cash. As soon as access to cash runs out and you've got somebody standing in the member service line who wants their money and you can't give it to them, you've got a big problem. So while times are good, reach out. We've got a lot of tools. We'd love to help you with anything liquidity related. Um, because those are some of the biggest challenges we face as financial institutions. So reach out when times are good so you have the tools prepared when times are not so good.
Yeah, yeah,
Yeah.
absolutely.
Yeah, I just reiterate, again, reach out, for any lending support that you might need. Now's the time to let us know, and we can consider it. So,
All right. Well, thank you, Josh. Thank you, Tim, for the great conversation and valuable look into how Treasury supports credit union success in real, practical ways. And I just also want to thank TCT Risk Solution for sponsoring today's episode. Seems fitting. Vizo Financial and TCT Risk Solutions have joined forces to deliver enhanced data-driven risk management solutions to credit unions. This partnership can help your credit union move beyond reactive risk management towards a more proactive, performance-focused approach that supports long-term stability, resilience, and growth. Leverage industry experts in analyzing tools to help you unlock actual insights that aid in interpreting risk, optimizing financial performance, and making more informed strategic decisions. Contact your corporate account managers today to learn more. Thanks for tuning in to Financial Minds Meet the Experts. Be sure to join us next time as we continue spotlighting the people and expertise driving credit union success across the industry. Until then, stay focused, stay informed, and keep building a stronger financial future. Thanks for listening. Don't forget to subscribe and make it a great day. Thank you.